Today is Monday, November the 6th, 2023. Welcome to the show. On the program today, there is something strange going on in the labor market these days, and people are actually struggling to find work. We're going to look at the shift there. Also, RBC is warning of a major mortgage shock with almost $1 trillion worth of mortgages coming due in the next few years. Plus, it looks like the BC legislation targeting short-term rentals is starting to take an effect. Let's get started with today's news. The lead story today just has to be what's been shaping up in the labor market over the last little while. A few months ago, when you think back, it was virtually impossible for businesses to find enough employees to staff their stores, to staff their restaurants. How that script seems to have been shifted. Today, it's becoming harder and harder for people to even find a job. The latest unemployment numbers are in for both Canada and the US. Things are quite a bit tougher for those who have been looking for work in October. Here at home, we saw the unemployment rate that shifted up to 5.7%. That's a little bit higher than the 5.6% the market had been expecting. It's also an increase from the 5.5%. Now, we saw that in July, we saw that in August, and we saw that in September. So 3 months at 5.5%, that's now shifted up to 5.7%. Unemployment is now at the highest level that it has been since January of 2022. So during the month of August, there were 17,500 jobs added to the Canadian economy. That's lower than the expectations of 22,500. So this means that the number of jobless individuals here in Canada came in at 1.2 million, just more than that, 1,229,400. And that is up 40,300 just for the month. Importantly here, just over 60% of those who are unemployed have now been unemployed without a job for over a month. And that signals the increasing difficulty that people are having to find jobs. Another big issue here is that in the labor market, it's the full-time versus part-time unemployment. And yes, not everybody wants to work for full-time. Not everybody can work full-time. But if you're looking at supporting the higher cost of living that we're seeing these days, obviously with the inflation having been what it is, with prices having been what they are, generally full-time is considered preferable. In October, full-time positions actually dropped 3.3% nationwide, while at the same time, the part-time positions, they actually increased 20.8%. And that follows a 47.9%, almost 48% increase in the month of September. The question obviously is, why is this happening? Well, first of all, the leading headlines these days always seem to point at immigration, and it really has been booming here in Canada. And the fact is that we're accepting more immigrants than we can even create jobs for. Since the beginning of this year, since January of this year, the unemployment growth has averaged 28,000 jobs a month. Population growth, though, that's averaging 81,000 people a month. And according to Stats Canada, there needs to be a creation of 50,000 jobs a month just to keep the unemployment rate steady. And we've seen that just tick up. In October, as an example, we saw 85,000 people added to the labor market here in Canada, but only 18,000 jobs were created. Another factor that has to be contributing this is after 3 years of the kind of, I guess, a certain segment of the population living off of benefits from the government, living the easy life, deciding that experiences were more important than actually going out and working. We're starting to see a group of those people running out of money. They're facing reality, and they're now back in the labor pool that's out looking for work. So that's a contributing factor as well. And lastly, we can't forget that this might just be another sign that this aggressive rate hikes that we've seen from the Bank of Canada might be starting to take hold, and it might be sort of softening the labor market. Now, also during October, the U.S. unemployment rate, it saw a 21-month high. That came in at 3.9%, so way lower than here in Canada, but 3.9%, that was, again, there slightly above the market expectations of 3.8%. In September, the unemployment rate in the U.S. was 3.8%. This report, October, the number of unemployed rose by 146,000. That now stands at 6.51 million people. No doubt the same conditions that we're seeing here that are affecting the labor markets are having a similar effect in the U.S. The U.S. Federal Reserve, they've raised their target rate now for federal funds from 0.25% in early 2022 up to the current range of 5.25 to 5.5%. The Blossom community is continuing to grow. There's now around 60,000 members here in Canada. Some very exciting plans, I understand, for the next couple of months. If you are not a member yet, it's free to join. You just download the Blossom app. It's easy to get started. If you do set up a profile, be sure to follow me. My username is Mark B, so MARCB, and you can keep up to date on my holdings and the trades that I'm making. There is a recent report that's been put out by RBC Capital Markets, and this is saying that of all the mortgages in Canada with the major institutions, 60% of those mortgages will be up for renewal in the next 3 years, between 2024 and 2026. This is really setting up a potential disaster in what they're calling a payment shock when it comes time for these people to renew their mortgages. And it spells potential trouble for homeowners themselves who've been living at the edge of their comfort zone or the edge of their ability to actually pay their mortgages. But also clearly that would be a potential problem for our banks. The RBC update, it reads, unless there are significant declines in interest rates, we believe that credit losses will inevitably rise, perhaps significantly in 2025 and beyond. Now in 2024, there are $186 billion worth of mortgages that are coming up for renewal. Then when we shift up to 2025, that number goes up to $315 billion. And then just to top things off, it's expected that there will be $400 billion worth of mortgages that are maturing in 2026. Tiff Macklem, he's the governor, of course, of the Bank of Canada, and he's recently said that the first potential rate cut for the bank will be middle of 2024, so middle of next year, possibly as late as 2025. It'll all depend on the economic data that come in between now and then. So if you are a mortgage holder that falls into this group, probably would be prudent now to crunch some numbers, look at your circumstances, and make sure you're ready to handle the inevitable higher payments when they do come due. It looks like the new legislation in British Columbia that is designed to prevent people from listing non-primary residence properties on Airbnb, similar rental platforms, looks like it is having an immediate effect, I would say. According to an analysis done by the Globe and Mail, there are at least 22 condo owners in a couple of dozen buildings in downtown Victoria, in this example, that have already put their units up for sale in the last 2 weeks of October. These buildings that they're in actually do allow for short-term rentals, so it's not like they can't do this here. It seems to be a reaction to the new legislation. For comparison, prior to the legislation being announced, there were 9 units that were listed for sale in early October. So quite a jump there. The new rules here, they're going to take effect in May of 2024. And it looks like investors who had previously purchased units with the sole intention, explicit intention, I would say, of renting them out to tourists or other short-term users, they're looking to exit that business. And under the new legislation, the only situations where you could rent short-term units would be if they're part of your main or your personal residence. That would basically wipe out the majority of what are currently considered to be Airbnb, Vrbo, that type of companies' units. Now, there are a few limited exceptions to these laws as well. There's a recent study that is out from McGill University. I covered that previously on this program. It found that about 16,000 of the 28,000 units currently on short-term rental platforms in BC appear to be whole homes that are rented out repeatedly for short stays. Now, in response to this legislation, Orion Rogers, he is a spokesperson for the Property Rights Association of BC. This is a group that represents about 2,300 property owners, most of them with short-term rentals. He said that many investors, they bought properties and they were under the impression that they were protected by existing municipality zoning, by bylaws. And the new provincial law now overrides that activity that would be allowed by a municipal law. Now, he's certainly not alone. There's been a lot of controversy over these proposed laws here. A lot of people have said the government is overstepping its boundaries. No doubt there will be significant litigation as this issue works its way through the courts. Coming up for the balance of this week, we are still in the middle of earnings season, and there are a lot of earnings reports yet to come out. Some of the ones I'm focused on later today, we have realty income reporting, also Finning. Tomorrow, Uber will report, TransAlta, and tomorrow the Canada Balance of Trade report will be released. Wednesday, we have earnings reports from Disney, we have Suncor, we have TransCanada. Also in the insurance space, we have Manulife, we have Great West reporting, many more, of course. On Thursday, Rogers and Canadian Tire will report, and then Friday, Algonquin will report as well. So if you are not subscribed to this program, I do this update every Monday, every Wednesday. I would invite you to hit the subscribe button so you don't miss any of the upcoming episodes. I will put a link in this video to our Investing Academy. As always, I thank you for watching this video, and I look forward to seeing you in a couple of days.